Good afternoon, traders. My name is Raul Rivera. I am the founder of themarketprofile.com. Today is August 30th, 2017. Let's get started with today's trading. And today we had, or at least expected, a pretty exciting day. We didn't quite get it though. Early this morning we had the GDP and ADP employment. And, the ADP, we were kind of okay. It might have a little bit of volatility, especially when it comes to gold and 30-year and currencies, right? Bonds and currencies. But we didn't really quite get a reaction out of the ADP. And then on top of that, we had GDP quarter over quarter. It's a preliminary number. And that came in at 3%, which is funny to the trading community because we haven't been a 3% GDP economy in quite some time. And even Warren Buffett came out on CNBC today talking about, I don't think we are 3% GDP. So even one of the greatest minds in investing is sort of doubting this number. I mean, it's a preliminary number. It'll probably get revised down, in September or something like that. But nonetheless, there wasn't a reaction out of the market. The gold futures didn't do anything. The bonds didn't do anything. Even the currencies, very, very small reaction and very little opportunity to try and profit from the increase in volatility that we usually get during these announcements. So moving on, we didn't have much news other than that. And the crude oil inventory report, which again, this was the fifth week in a row where we really had zero reaction to the number, but I'll get to that in a second. Let's take a look at the S&P 500 here. So this was the first contract we were looking at, and early this morning I was having some issues with my computer, had to end up restarting it. I guess I leave it on for like weeks at a time, and sometimes it just needs a little bit, a little breathing room, a little shutdown, and then everything just works 10 times better. So I had some issues, so I only focused on 4 contracts. That was the S&P, gold, and the 30-year and crude oil. So those are the contracts I'm going to go over today. So here in the S&P 500, we had a long bias coming in. We figured, hey, if the GDP number can push the market lower, we could possibly profit to the long side, since BTFD is a way of life since 2013. The bull market, you just gotta close your eyes and just buy anything. It'll work for some reason. I mean, that's not the way I operate. That's not the way I trade anybody. I mean, it's just a figurative speech to just show the sheer power the bulls have over the bears, and have had that power over all these years. Okay, so taking a look at the S&P 500, we found value. Early in the session, we were really only looking for areas of value in the market's most recent memory. So here we split the distributions. We found a couple of areas of value also right there, and then yesterday on the push higher here, we also found a little bit of value. So as you can see, I had a 10 contract order there scaling in, 2 at 41, 3 at 40, and 5 at 39. The market made it as low as I believe 42 and a quarter, so it didn't quite make it down to these lows. Would have been great though. We knew the market wanted to go higher, so we weren't really looking to short. And if we were looking to short, we wanted somewhere that's pretty extreme, right? Somewhere that's way up there at the highs, and we were looking at 63 to 65. 63 to 65 to short. I didn't have any orders. I figured, if by 12 or 1 p.m. we're heading into the 60s, which we almost did, I'll place some orders there and see if we can play to the short side at those highs. Market didn't quite make it up there, but the idea to get long and get long early, it's just the way it works here in the S&P 500. A lot of buying today, guys, a lot of buying, and usually a lot of the buying always comes in towards the end of the day. So people, investors, traders, they believe in the market, they believe in America. So plus 40,000 total imbalance. It's not the biggest I've ever seen. I mean, we've had days where it's like in positive 75,000 to 100,000. And we've also had days that about those same numbers in the negative portion, right? Negative 75,000 to 100,000. Those are some strong, strong volume days. I mean, pure conviction either to the upside or to the downside. Here we're seeing plus 40,000. What does that mean? It means that there were 40,000 contracts to buy more than to sell, right? So when you take the difference between the contracts that are being, used to sell and the ones being used to buy, you take the difference. Positive number means more buyers and sellers. Negative number means more sellers and buyers. And here we have positive 40,000. If we take a look at the institutional order flow, this is when we take a look at contracts of 50 or greater, okay? And who has the power to trade these contracts? The institutions, right? 50 contracts or more, it's always the institutions playing it. Maybe a few retail traders have the capacity to trade 50 contracts at a time, but that's not everybody. I mean, it's not even me, okay? And I have been around for a long time. I'm not slinging 50 to 2,000 contract trades because I certainly don't have, $100 million in an account, okay? So here, institutional traders definitely buying up the market here. And we can see that number ended around the 14,000 mark. So positive 14,000 came of volume to the buy side came from institutions, another 40,000, and this is including the institutions as well. So 15 minus 40, that's what, 25,000. So 25,000 contracts was the push from 1 to infinity contract sizes, and the other, let's just say 15,000 came from the institutional traders. So they're evident. I mean, they were really in the markets today, and another trend day. This is unbelievable. Something we've never ever had in the market for 7 months. Suddenly, it's what we have very often. So no trades taken here in the S&P. And let me just go ahead and cancel these orders. There's no real reason to have these on overnight. And to that point, overnight, I'm going to start simulating some trades here, and I'm going to see if there's a pattern going on. I'm going to simulate in the sense of not use real capital and place use market profile levels and place orders at specific areas overnight. Because when we switch over to the hybrid view, it was in the overnight that we made one high, and it was in the overnight that we made a low down here in the S&P. So if I can find levels of support and resistance based on value, I'm going to go ahead and try and put some orders. Again, I'm going to simulate it just to see if it works. No real sense in using live capital. At least at the moment, I want to see if a strategy works of trading overnight to try and catch a high and a low. Obviously, on a day where we're not expecting something overnight. I believe tonight, or maybe it was yesterday, I got to take a look again, but we have Chinese PMI numbers, manufacturing PMI, and that's pretty big. Could cause a little bit of volatility and maybe spark a trend, all across Europe and overflowing into the US. Who knows? But I've noticed it's always in the overnight session that we make these highs and these lows, and it's in the US session that we decide to trend in one direction. I mean, it's been the case for quite some time now. Okay, next up we got crude oil, and this one was the trade of the day. Perfectly executed, if I do say so myself. So taking a look at the crude oil market, we were expecting the market to consolidate overnight. It did. Very tight trading range. We had a D-shaped distribution. Every time we get on, we start trading on Wednesday, it's always consolidating, waiting on that crude oil inventory number. Now, today we didn't see any impact on Harvey, and why would we? These reports are usually a week Um, this is talking mostly about last week. Next week we'll be talking about this week, and that's what's going to be on that report. So Hurricane Harvey effects are going to take a toll, and we should see them in the next API, which is Tuesday. Actually, because we have Labor Day, it's actually going to be on Wednesday. They should push the crude oil inventory number to a Thursday, just because of the long weekend. So next Wednesday we should have the API at 4:30 p.m. Eastern time, and there I think we're going to see the real effects of Harvey, Hurricane Harvey, of course. Refineries have shut down. About 30% of them have, 30% of the capacity in the U.S. is going to be shut down. A lot of the refineries are down in Texas. I mean, that's a huge number, 30%. Unfortunately for us, it might just mean that gasoline prices are going to increase at the pump. But if you are, trading gasoline futures, now I don't know what happened, but the initial margin to trade gasoline futures, I think it increased. I don't remember the initial margin being like 20 something $1,000. That is absolutely ridiculous. But I know I can trade it for a lot cheaper than that through NinjaTrader. So at least on an intraday margin basis. Either way, gasoline futures is not something I really trade, but the crude oil futures are what I actually trade. So this is the 5th week in a row, and it's just hand in head, hand on head type of hand on face kind of reaction. You know what I'm saying? Because this is the 5th week in a row where we have zero reaction as soon as the number hits. As soon as the number hits. Used to be, as soon as the number hits, you have at least 50 to 70 ticks reaction to the upside or to the downside. That creates significant opportunity for traders to come in and get anywhere from 50 to 120 ticks profit if they know exactly where to buy, right? The high and the low of the initial reaction. We do a really good job at themarketprofile.com and in our trading room picking these levels out, right? Because we use value. And prices, it doesn't matter whether we're trending or we're just consolidating, prices will always have a reaction at value, okay? Doesn't matter if we're going up all day long. As soon as we hit that value, we consolidate and then trade higher. That's what happened yesterday in the S&P 500, okay? And there's always going to be some sort of a reaction, whether it's small or big, at these levels of value. Now, let me just show you guys my fills. Hang on, bear with me here. How do I do this again? Data series, scroll down. So the number hit. Number came in. We had, I believe, an inventory draw in gasoline and a very small build in crude oil. We had a big draw in crude oil and a very small build in gasoline prices. I think gasoline continued trading higher for the rest of the day, but here in crude oil, we figured, you know what, we're gonna get the selling started early, and we're gonna try to do it between 50 and 55, 46.50, 46.55. At least a reaction, quick reaction from the volatility that usually comes right after the report gets released. And it took about 10 minutes, and then I decided to cancel those orders because we didn't get the move to the upside that I was looking for, right? And I was only really looking to short crude oil. I learned my lesson, okay? And that lesson is, if a hurricane ever hits Texas again, do not get long crude oil. I mean, it's that simple. You learn your lessons, learn through these patterns. Short crude oil and get long gasoline, right? That should be the game plan next time, if there is a next time a hurricane hits and makes landfall in Texas. Okay, so I was only really interested on the short side rather than the long side, so this level failed. We didn't quite get to it at the number, but then we got quite a little bit of a bid, and it was partly due to short covering from the lows. and maybe some new buying. I don't know how to read this just yet. I want to see what happens. But here in the candlestick form, we can see this was the bar with this was the bar right here. This one with the crude oil inventory report. As you can see, it didn't even make it to the pink area. You know, made a new low and then traded higher. So came in, canceled those orders. Market started catching a bid, and then you know, I had left my orders here, so I had an 8 contract trade set up here. I had 3 contracts at 70, 3 at 75, and then another 2 contracts at 46.80. I got filled, I mean, absolutely perfectly here on my first area, which was 3 targets, and the reaction at coming into value just couldn't have been any better. A big sell-off coming in just after. So taking a look at the footprint. Oh, whoops. Okay, what happened to their footprint? We'll just leave it as is. But as you can see, 46.70 is my fill, and we got as high as 46.72. So the very, very high of the day was 46.72, and I got short at 46.70. This is one of those things that, you know, can only happen if you're using value. You know, I certainly haven't seen another trader myself. Maybe there is. I'm just kind of like being that guy right now. But it is extremely difficult to do this on a daily basis, and this is something you could expect to do quite often in a time span of a week. Okay, in a time span of a week, you might be able to do this 1 to 3 times per week using the market profile. It's simply because we know how to locate value based on split distributions, and when we split distributions, what we unlock is a whole totally new set of value areas that are hidden inside one day's worth of value, right? And when we split those times apart and we split those distributions, we find areas of support and resistance based on value, right? The market profile is, like I said many times before, it's a charting technique for locating value in the market. And there's a reason why the institutions love this, love to use this so much for support and resistance, and it's because it does a very good job at locating value. So here I got short 46.70, 3 contracts. Zoom in here, and could have gotten a little more, but I let them go here at 46.04. 46.04, that's 66 total ticks of profit. Okay, 66 total ticks of profit on just a single trade, right? And the idea, my philosophy of the market profile is to take as little trades as possible to make as much money as possible. I definitely know a lot of traders out there that like to take, you know, they'll take 5 to 6 trades per day, looking for about 10 ticks or 5 ticks in the crude oil market, and you know, that could be, you know, a lot of work. If that's something you like to do and you like to be active, by all means, do it. But if you can achieve the same amount of profit with just one single trade, I think it's well worth investigating on how to do so, and the market profile is definitely one of the ways to do so. So 66 ticks in profit on a 3 contract is a pretty good day. Okay, next up we have gold in the 30-year. Let me cancel these. Gold in the 30-year. Looking at gold. Gold is the most talked about commodity at the current moment. Nobody cares about crude oil. Nobody cares about soybeans. Nobody cares about frozen concentrated orange juice. Nobody cares. All people care about are gold and silver. Gold and silver, but gold mostly because, of course, it's the one that's valued the most. So here in gold, we tried to get short and tried to get long. Okay. So to the short side, we were looking at 23 half to 25, 23 half to 25, and then 29 half to 30. Well, 29 to 30 I think is actually what it is. 29 to 30. So 23 half to 25 and 29 to 30. Of course, the market didn't do anything, and then down here we were looking to get long 1303 to 06. Sorry, 1303 to 05. 1303 to 05. So you can see the market really didn't do anything. All it did was just continue to create value and distribute throughout the rest of the day. D-shaped distribution, consolidation. You know, trying to get long just below the lows, just above the highs was the way to play this one, but the market didn't even do that. If we take a look, the high and the low were already made in the overnight session. I'm going to go ahead and switch it over to hybrid view here. Here's the high of the day made at 7 in the morning actually, and then the low of the day made just after 8. Okay, so I guess I was wrong on that one. But the high and the low were already set in, and you know, it wasn't an inside day. When we take a look here, we had just traded outside, didn't quite make it to the highs again, and just because it did trade outside, I wasn't really looking to short at the highs. Even if I tried, I wouldn't have been able to, because the market just continued to trade sideways. So with gold, it was just a dud, didn't really do anything, just consolidated for the rest of the day. But looking at the institutions, okay, this is important. Looking at the institutions, they were still buying today. Okay, they were still buying. So buying inside of consolidation is pretty much a pattern that we see when traders are positioning themselves in one direction, right? So if we see consolidation like this, and we see negative selling here, that means, you know, we could speculate and assume that they're building a short position. But here, of course, it's the exact opposite. The institutionals are buying on consolidation, which means they're more than likely building a long position. This is a pattern that we saw over the past few couple of weeks. Let me just pull it up. Right there, we had plenty of consolidation in here, right? And it was just non-stop buying, 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 buying. This day was a little flat, and then here they were buying, buying on the move higher here. The explosion to the upside buying. Yesterday they were selling, right? Probably profit taking, and today they're buying again. You know, if we continue to see buying for the rest of the week, we probably just continue to move higher. I think we're definitely going to continue to move higher now. One of the targets I set out for gold was 1325 and then 1350. You know, it would have happened eventually. It happened very quickly simply because we had the North Korea, you know, missile launch and everything like that. So it happened faster than anticipated, which is good if you're long gold, right? You're hitting targets much faster than anticipated. But even without the North Korean launch, the economics of the country say the Fed isn't going to raise interest rates. The dollar is probably going to keep going lower. So where do you find value in the market? Where do you find growth? And it's in gold, right? People are already skeptic about, you know, what's going to happen when Congress comes back. Trump is prepared to shut down the government just to get funding for his wall. So it's, you know, a lot of things that just Wall Street doesn't like, right? So it puts a lot of pressure on stocks, which increases the value of gold, because gold has three personalities, right? Three personalities. It trades like a commodity, it trades like a currency, and it's also a safe haven trade. So it's got three different personalities. Next up, we got crude oil, the 30-year bond, and today was the last day for the September contract. So if you're trying to trade the September contract, tomorrow you're not going to be able to. Data is not going to apply, right? So you got to roll over to the December contract. Here in the 30-year, trying to do the same as gold. I mean, it literally has been trading the same as gold. So here we were trying to short 19 to 23, 157.19 to 23, and then we were trying to get long 156.15 to 11, 15 to 11. As you can see, prices didn't even make it down there. D-shaped distribution for most of the session, and institutional traders were buying. Now, a couple of contradictory things, right? So you have gold institutional traders buying, you have the 30-year institutional traders buying, and then when we come back over here to the S&P 500, we have institutional buying pretty big here in the S&P 500, right? So if the S&P 500 trades higher, usually the 30-year likes to trade lower, gold likes to trade lower, because people are moving out of those commodities and those treasuries into the stock market, right? It's almost like a rotation. In the stock market, we see rotations all the time, like technology into biotechs, telecom into materials, some weird rotations like that, defensive stocks into growth. We experience those rotations a lot, and those rotations occur when big institutions, are taking profits from one sector, and then, these institutions are paid to continue to create money for their clients, so they have to put their money elsewhere. So they get out of one sector and then move into the other. So really strange, I don't know what to make of it as of yet, but this is a lot of buying in the S&P 500, and I don't think in gold in the 30-year I'm seeing the same amount of equality of buying and selling, right? So maybe the S&P continues to go higher. We have the non-farm payrolls on Friday tomorrow. I think we got a couple of pieces of news. I think we may have existing home sales. Maybe that already happened. I got to take a look at the calendar, and I guess you guys should as well. Anyways, guys, that's really all the time I have for today. If you guys like this video on Facebook, make sure you guys click like. And if you guys have any comments, make sure you put those in the comment box below. I'd like to invite you guys to come check out the trading room. You could do so by going on the website, www.themarketprofile.com. Claim your 14-day free trial, where you'll watch me trade all of these contracts, plus a ton of other contracts that I can go over. Like I said, the market profile works on every single futures contracts, and we can analyze value on any one of those. And also, there's something else I wanted to say. Yeah, just swing by the website, claim your 14-day free trial. You'll watch me trade these markets and watch me manage them live, real time, every single day. I hope everybody has a great rest of your day, and I will see everybody again tomorrow. Thanks, guys.